Trent Brandon Bradshaw Financial Planning, and Mind Your Money. Thank you for joining us for this market update. We're coming to you on September 26, 2022, after the market close. We just wanted to give you an update on what we've seen over the last few weeks in the market and what we're doing as far as adjustments within the portfolio. To kick it off, what we're looking at from an interest rate standpoint, obviously we had a 0.75% increase on Wednesday last week. The Fed came out with aggressive language. Market did not interpret that very well. Obviously there's a lot of pressure on the market. Volatility has gone up again, which is not good in the whole sense of things. But going forward, what do we expect and how are we repositioning? Well, going forward, we continue to think the Fed's going to be aggressive. They threw out a target of 4.6% on the federal funds rate. That means we're probably going to be facing somewhere in the neighborhood of 1.5 percentage points of increases before the end of the year. Again, that's going to put some pressure on stocks, going to put some volatility back into the market over and above where we're at now. Again, we're watching that, and that's why we're potentially we're going to make these changes in the next couple of days here on the portfolios.
Yeah. So again, it's been a rough market, obviously all year, but especially in the past few weeks, it's been pretty rough. As Trent mentioned, based off of some of the language the Fed used was pretty harsh. Market didn't like it. So again, we're constantly monitoring the situation. We've made a lot of changes within the Fidelity accounts because we're trying to be nimble throughout this whole entire year, and we do have our quarterly reallocations coming up. So we will be making some changes there, and what we're doing there is really adding more hedges or more defense to the portfolios to still try to protect as we get through the end of this year and get to the end of this year into next year. I think some of this volatility will lighten up, inflation gets under control, and the market feels a lot more comfortable. But what we're doing inside the portfolio is add more dividend payers, quality companies from that end, some hedges inside the buffer positions that we have. So again, we are still trying to reduce risk as much as possible. It's working, but again, it's still a tough market. But again, we're trying to be nimble and make the right moves intra-year for sure.
Right, and we're going to maintain our position in the U.S. dollar. It's probably been one of the best investments that you could have made throughout this year. It's strengthened so much against other currencies that, again, it's been one of the greatest places to be. But we'll maintain that position going into the end of the year. Hopefully that near-term catalyst with the midterm elections kicks in. Also had a question or several questions from clients. When do you think all this is going to end? I think we'll start to see some improvements in the April to May timeframe of next year, if not right after the midterm elections, because we're expecting gridlock. Whether that happens or not, who knows? But ultimately going into that April to May timeframe, because you remember Wall Street has a nasty habit of comparing year-over-year growth rates and also looking at inflation on a month-to-month basis. That could be setting up to where we'd have some advantages to reinitiate positions in technology, consumer discretionary, and maybe retail at that point. But for now, dividends, hedge, protection.
Yeah. So that's the story and the plan that we've got and the process that we're taking across all accounts from that end. But again, it's a rough type of market. But again, it's about time in the market and not timing the market. So again, we've got still some long terms that we're looking at for most individuals. Everybody's situation is slightly different. But again, time in the market is really where everything shows. This is just one of those uncomfortable times. So we'll do what we can, and we'll protect as much as we can. But any questions, certainly reach out. I know this is a rough time and can be an emotional roller coaster. So let us know if you've got specific questions. We'll certainly be able to help you out. Make sure you follow us on social media and the videos on YouTube and everything that we send out. It'll really keep you informed. But again, questions, just let us know. Brandon Rogers, Trent Bradshaw Financial Planning, and Mind Your Money. Take care.